Nitin Kumar, someone who tracks the banking sector with the magnifying glass, joins us. He represents Quant Broking. Nitin, good morning. Thank you for joining us. On paper, nothing materially has changed. Credit growth is not back. NPA concerns are not over. Bond yields are at 9%. But stock prices for banks are up by about 15 to 20%.
Yes, the banks which were not going anywhere for such a long time. This was a conversation that we were having last time. The rally has been particularly sharp in last week or so, with an approx 25 to 30% return across the large cap names as well. I think the rally is running more on hopes that the asset quality cycle is likely to turn, and on expectations of a stable government also post the elections. And this was then well supported by the good macro data, wherein the CAD surprised on the positive side, and it's on the lower side in last many years now. So if these data points sustain, and if we get to see a stable government going ahead, then I think this rally could extend further from here on also. But as of now, the valuations on FY15 looks full, so one need to take a longer term call going ahead if one were to remain invested in the stock.
So give us a list of your top 3 recommendations from the sector.
So yeah, within private banks, we were more positive on ICICI Bank and IndusInd Bank. Post this rally, I think though both these banks still remains the preferred bid, but with a sharp run up, I would say that one need to have a horizon of at least a year now, because FY15 valuations just looks full, as I said, and the street would soon be rolling over the targets to FY16. We also have to do the same, and so these two remain our preferred picks. Within PSUs, we are more positive on PNB and BOI. The other stock which we liked was Bank of Baroda, but that has shown a very good recovery in the last week. So we incrementally would be more positive on Bank of India, as it has not participated to that extent in the rally which has taken place. So these are the 2 banks we like on the PSU side.
Nitin, but let's say closer to 625 on PNB, closer to 1200 on ICICI Bank, closer to 1300 on Axis Bank. Do you think these are not the good entry points for a first timer? Do you think one should now wait for at least 5% decline before you buy into banks?
Yes, so those who have already holding the positions in the stock, they may take and if they have to take a long-term view if they want to continue to hold. Otherwise, for a first timer, I think it's very difficult to enter into these levels, especially in the private names. On the PSU side, in select stocks like Bank of India or say PNB also, they were already very much hammered. And if the cycle were to turn, and if the asset quality were to show even a minor improvement as to what it has been in the previous quarters, then I think there could be some good upside lift, especially as you start looking at FY16 for these names, because these stocks were hardly trading at a PE multiple of close to 3.5 to 4. So even 1 year of earning accretion coupled with a good turnaround on the asset quality, if it happens, would make a meaningful difference to your book values.